So let me show you how you can find these targets. So if you look at all our videos, we like to use market profile. Market profile has been around since 1985. Well, price profile has been around since 1985. And volume profile has been around since 1994. So it's one of the main instruments that we like to use to see where all the trading participants have been in the previous sessions. And that lets us know where these magnets are, or these target prices are, when we get a liquidity grab, buy or sell inside of our zones. So these are really good targets. A lot of traders ask, well, how do you get these targets way ahead of time? You can see that market profile is notorious for getting lows and highs in the market. You just have to make sure that use a larger profile level, like we like to use. You don't want to use a, we don't like to use a 30-minute market profile. It's just a little bit too small to find out where the participation's been. But let's go over the basics of market profile first, and I'll show you how we find our targets. So this is our market profile today. We have a high value that's categorized as the big red thick line. This is volume profile, by the way. The blue line is the control point, or the POC, point of control, and the low value area is the green line. So if you're in between the low value and high value, meaning the red and green, then you're in what's called a balanced market. So the market's balanced right now. You're in a balanced market. Any violation of that high value, low value area for the day on any given market that you trade, and the market becomes imbalanced. And we're looking for big vertical moves to the next participation area. So that, in summation, is how you can trade market profile. You look where low value is at, you look where high value is at, and then if we break outside, start closing outside of it, you're looking for a continuation to the upside, to the next value area. Or if it break below low value area, you're looking for the next continuation to the next value area. Also, these dots represent price profile, or I call them the PP levels. Those aren't as important as volume profile, but needless to say, when you traders know when you break out of these, they become major support and resistance. So let's get the chart down, and let's take a look at where the market participation has been for the week, and how we can find these pockets in the market, and how we're looking to trade. If you're in between the daily market profile, which we are right now, we're in between. You can see it hit the high, hit the low, hit the high, hit the low, back and forth. And any violation outside of that profile, we're looking for the market to go vertical. So what you want to do is find out where the previous participation has been in the market. Now, if you can see these big vertical moves here, this educates us right away that there's no supply and demand in between those levels, and the market should really rally hard if it goes back up through those levels at any given time. So that tells us, going to the right, is that we have no resistance above the current high value area of 67.28 and a quarter on the volume profile until we get to the control point of 47. So you have nothing but an area of no resistance above us. Because remember, this looks at all the participation that is in the market. This doesn't look at indicators such as MAC, moving averages, all those lagging indicators. This is actually order flow in the market, where market participation has been, and this is where they like to gravitate price towards. So if we break out a high value area, then we got two spots in the market where this market should trend to, and that should be our high value area up at this level for the triple top, and then or if it breaks through, old support becomes new resistance, but that is a target for us. Those are our two targets to the upside. So if you look right here, also, we have a high value over here. So we do have a high value resistance at that level. Now we know our three levels that we can target our trades for to the upside just by looking at the previous market participation. And you can do the same thing on the downside. So we got our levels now, 34 target, 47.5 target, and 57 target. All right. If you look on the downside, this low value area is really close to 19. So that would be the ultimate breaking point on the downside if we break 19 level. So that's the value of yesterday, low value area. So that lets us know if we break through that level, what's our next level we should run. We're looking for a run down into this control point level. The value's already hit there. So you look at the previous one. So these are 2 levels we'll look at. And now we're marked up for the day at all levels of the market. So now you have your levels for the entire trading day to see if we get pulled into the market, where can a possible runner run to? They love to gravitate towards this. If you look at all our videos and you look at all of them over and over again, you'll see this market profile are very, very, very accurate. Price likes to gravitate towards them after getting pulled into one of our liquidity grab zones. They love to come right to these levels, especially if there's a hole in the market. So if you see a hole in the market, now that these levels are brought up, we can skinny it down, put it up. Now we can clearly see, I can go to the right margin and skinny this down. I can see my pockets in the market. Now I know my levels on the S&P. So just like that, I can find out where my levels on the S&P are, where our targets are. So if we get outside of this PP level, 29.25, looks like we're going to 34. Get outside of 34, looks like we're going to control point to 47. Break down below 19, looks like we're going all the way down to 04. So that's how we do it. Now over here is our liquidity grab and our trigger entries. So I want to show you the difference between a larger Renko size and a smaller Renko size. This is a 112, meaning it takes a 12-tick reversal to reverse price inside of the zone. So the difference is that you're going to get a 12-tick reversal outside of the zone. I mean, when you come in the zone and reverse outside the zone. And a 35-tick will be a bit different. So this is an 18.75 pull-in on that push up this morning to 28. That's a 10-point S&P point move right after the London Open around 3:45. We love to see these London trades. If you're a European trader, that's the best time to trade the system. Right just before 15 minutes before the London Open, an hour after the London Open, you get these nice little possible moves. So you want to look at that. But if you look at the difference between this and you get pulled in on a 135, this is a 35-tick reversal. So that's a 24.5 pull-in versus a 18.75 pull-in. So when you come down these zones, you can dictate how much you want a confirmation getting inside and outside these zones just based upon your Renko size. All right, so we do know that we love to trade off of these liquidity grab zones. So when you come into a liquidity grab zone, we love to trade off of these levels. And I did a video, just go over a couple days ago, played this video, how to trade these major liquidity grab zones that we have in the market. And you guys can see how to trade that. I'm not going to repeat myself on that video we did for as far as that goes. So currently right now, our zones are up. We're looking for a push up in the market currently. We've had a couple buys this morning. You can see we had 2 yellow trigger entry buys this morning so far. And then we're looking for a continuation. If we can get above this 29 or 67 and 334, we'll get up to, it looks like possible a target up to that 34 level is a great target area. All right, so let's get some ticks this morning. That's what we're looking at here this morning.